Hello everyone, welcome to the IchimokuCharts.com hourly analysis for the SP 500 for August the 9th, 2010. Well, a bullish day today, and we can see that we have the market trading up with a series of higher highs and higher lows. And at the end of the trading day, the market is still in an uptrend with a higher high and a higher low. Just looking at the first hour of trading, we had a very indecisive spinning top type candle which didn't lead to a change of trend, and it looked as though this large area of resistance, this overhead resistance, may have held with the market trading off, but the market failed to break the low of that candle and come off. We then had quite a bullish candle, some indecisive candles, and quite a bullish candle on the in the second last hour, with a candle with a relatively smaller red body for the last hour of trading. Now, interestingly, the market tested the top of this zone of resistance that we identified. That's at roughly about 11.29, and the market has come off only in a small way, hasn't sold off substantially, and the trend remains up. So there is a possibility that the market will continue to trade up above that area of the top of the area of resistance that we've highlighted here around 11.29. Now, looking at the Ichimoku charts, we are trading up above the cloud, so the market has an overall bullish bias, and also trading up above the Tenkan-sen, that's the blue line here, and the Kijun-sen, the pink line. So the market is bullish in the medium-term and fast-term time frames. Now, this market is looking a little bit overextended, so it's looking the market is a fair way away from all three of these indicators. So quite often what happens is that the market tends to act a bit like a rubber band. When it looks a little bit overextended, then it tends to stretch back towards these indicators which represent equilibrium. So markets move from disequilibrium to equilibrium. The market is looking like it is in a little bit of disequilibrium at the moment. Now, we don't have any signs, any solid signs that that's happening yet, although this red-bodied candle offers some potential for a change of trend, but we don't have a change of trend at the moment. So the low of the current candle becomes very important for a potential lower high and lower low. Now, just looking at the Kijun-sen, that's turned flat again, and when that turns flat, it tends to be an attractor of price action. So there is a good chance that the market may retrace back towards that level. And if we look at the Tenkan-sen as well, that's lost its the angle of the slope of the line has lost its steepness, and it's rather flat at the moment too. So that tells us that the market doesn't have the same upside momentum that it had previously. So that could be a warning that there may be a change of trend to the downside as well. Now, just looking in bigger picture terms here, we can see that there was a previous significant swing high in this market, and that's roughly around the 11.30 to 11.31 region. And the market, if it does continue trending up to the upside, then it will interact with that level. So that is a level that we do need to be very, very wary of over the next trading day or so. So for the next trading day, we need to watch this zone up to around the 11.30 to 11.31 level for a potential continuation of the trend to the upside. The Ichimoku indicators here have given us a bullish signal. We had a bullish crossover of the Tenkan-sen above the Kijun-sen, and that occurred above the cloud, so that is a fairly strong bullish signal. So there is a good potential for the market to test those levels. But also, by the same token, we do need to watch the low of the current candle for a potential retracement back towards the Kijun-sen.